Good afternoon, sir.
Good afternoon.
So, can we begin?
Yes, please.
So, good afternoon, everyone. I'm Ashita Rawat, and I'll be today anchoring for this event. So, Geeta Ratan International Business School was established in the year 2004. GIBS is affiliated to Guru Gobind Singh Indraprasth University, Delhi, and is approved by All India Council for Technical Education, Ministry of HRD, Government of India for Technical Programs, and Bar Council of India for Law Programs. GIBS has been rated A by the State of Regulatory Committee and a Fee Committee of Government of NCT of Delhi, and rated highest grading by A by Joint Inspection Committee of Government of NCT of Delhi and GIBS University. Also, GIBS has been rated number 2 by the Times Peace School survey consequently for last 3 years. Geeta Ratan International Business School has established Institute Innovation and Entrepreneurship Cell under the guidance of Ministry of Education. IIC keep on organizing events for the development of entrepreneurial ecosystem in the institute. Today, they have put in their hard work to put together this webinar in angel investment and venture capital funding for our early stage entrepreneurs. A startup is outcome of an entrepreneur's hard work, and however, it is not only entrepreneur who works in this other also play an important role. An angel investor, also known as a private investor, seed investor, or angel funder, is the highest net worth individual who provides financial backing for small startups or entrepreneurs, typically in exchange for ownership equity in the company. Usually, angel investors are found among entrepreneurs' family and friends. The funds and the angel investor provide may be a one-time investment to help the business get off the ground or an ongoing injection. It's difficult every stage. The role of angel investment and VC funding for early stage entrepreneur is undisputable. To enlighten us more about on this topic, we have Dr. V.K. Arora, a respected guest speaker for today. He is a mentor, advisor, trainer, and a learner in the domain of entrepreneurship, startups, business incubation, acceleration, and development, who is currently associated with GIZ India, Nexus, Wiki Foundation, Naskin Foundation, EduTech Foundation, HDFC Bank, etc., and has conducted over 100 plus workshops in domain of entrepreneurship capacity building and the small business development. He has conducted entrepreneurship mindset workshops for Delhi schools, principals, and senior teachers as well. Published 15 papers in reputed journals, books chapter, conference proceeding, etc. And has a life membership of ISD, NHRSDF, CSI, and IEE. He is well acquainted with majority of stakeholders in all Indian startup ecosystem. Apart from these, he has worked with 2 engineering companies as sales engineer for the sales and marketing of the electrical and electronics engineering products and services. Without any further ado, I welcome you, sir, on behalf of whole college.
But am I audible?
Yes, now you're audible, sir.
Okay. Thanks, Dr. Sheetal, for a warm introduction. I'm just going to share my slides. But can you see my slides?
As of now, nothing, sir. I think that will take some time. Yes, now they are visible.
Okay. First of all, I am thankful to the management of your institute for having invited me for this particular session. Dear participants, today we are going to understand a little bit about angel investors and venture capitalists in the startup ecosystem, especially for early stage startups. Before I actually go and I talk about angel investors and the venture capitalists, that is the funding part which we get against our equity, which we get means which startups gets against the equity. Before that, some concepts are to be cleared. And as you are just a student, I don't know how many of you are thinking about the startups or they are having their own startups. But I'm just taking from the point that you are management students and you have some idea about entrepreneurship and startups. Since the topic is at higher level, we talk about the funding from the outside only when we are ready, we are investor ready. There's a term which is known as what the investor ready, that you are planning for your business venture or you have already planned for your business venture and now you are looking for some external funding, right? So if you have some idea about the startup ecosystem in India, you will find that the promoter or the entrepreneur, here we are talking about you if you are working as an entrepreneur or if you are working as a promoter, then when you start your entrepreneurial journey, there are different stages, and there are different stages when we are looking for some investment. I hope you understand, no? As we are putting investment, buying gold, or we are investing against some fixed deposits, or we are keeping our money in bank, depositing our money, or we are funding to different organizations. We are investing through mutual fund, we are investing through share market, we are investing through some government bond, T-bills, commercial bills. So these are kind of the investment which we are doing. And you all must be knowing about the difference between the investment and saving. So with that particular background, try to understand from the mindset of any investor. Means if I am an investor and I want to invest my money into various options. So out of those options, in today's time, there is one option that I go to the startup companies and then I invest into that particular company. What are the advantages and disadvantages when we are going to choose the startup as a module where we are going to invest? This we will be seeing in the coming slides. But right now, this is 100% clear that any startup should be investor ready. That yes, I am ready for the investors and I can accept investment, and that will only happen when you can show something about your startups. So there are different stages, but four main stages when we are looking for some startups, that are number one at the idea stage. At the idea stage means you are having a very good idea, marvelous idea, superb idea, and no one can break it. Means you can feel that the potential of that particular business idea. If at that time you are looking for investment, that is possible, although at that time you will not find that number of investors or any of the investors they are coming to you, because idea stage is very basic beginners stage. But then too, if some investment is coming, that is not based on the idea, that is based upon the entrepreneur and the promoter. Means on the other hand, I can say that investors are not investing basically on the ideas, but they are investing on entrepreneur or the promoter. Show me who are the promoter, who are the entrepreneur, and then after we are investing it. Then the second stage becomes when your all that kind of prototyping is done. You have shown your value proposition, and then after you have made your minimum viable product or service oriented minimum viable product, and then after you have already have some company, say a private limited company you are having, and you have already introduced your product into the market. By that time we know about the product, we know about the value proposition, we know that how quickly your product can capture the market, and how quickly your product can capture the market. So something we can see beyond, that is plus, beyond the potential or beyond the background of the promoter and entrepreneur. So at that time, if we are going to invest, that is known as what the early stage startups. So the topic for you is this, that in today's topic is this, that we are trying to understand the investor's view when we are only focusing to the early stage startups. So early stage startups, I hope you know that a startup, that is a company which is recognized by the government of India or maybe the state government in some of the states in India, where you are able to show, where you are able to prove yourself through two parts. Number one is this, that some value proposition is there about the product and the products you are offering into the market. And number two is this, that the product market fit is there. Product market fit is there, by which I can at least understand I can envisage that what may happen after 6 months or 1 year. So at that time, if investment is coming, that is known as what the early stage startup, early stage investment. Then the third part is this, that you again move forward and you start capturing the market from 0.1%, say 0.5%, 1%, 2%. And as soon you capture the market, that is capture the complete market. Capture the complete market means the ratio of your product in the complete industry which are offering the complete, including your competitors who all are offering similar kind of products or services, right? So at that time, what is more interested to the investors is along with the background and potential of the entrepreneur and promoter, along with the value proposition and product market fit. Investors are also looking for business model, that what kind of business model you are following. Now there are different kind of business models. If you want to read more about it, there are a number of things you will find in YouTube. Many times it happens that apart from those business models which are already specified, say 10, 12 kind of business models mainly companies are following, we also do some innovation and we try to present some new kind of business model, right? So the product is ready, your services are ready, processes are ready, all the innovations you are taking care, all the qualities and characteristics are there which are pertaining to the entrepreneur or the co-founders or the team members, everything is fine. But now the question becomes that what kind of business model you are going to follow. Now what does it mean, that business model, why it is so important, that business model, what kind of business model you are following, whether it is a data driven kind of business model, or it is innovative products kind of business model, or it is platform creating kind of business model, or maybe it is a hybrid kind of business model where for the first 1 year you are following two kind of business models, then after from first year to the 2.2 years you are following a third kind of business model, and then after beyond 2.2 years you are following some other kind of business models. Maybe some of the business models are already existing to the market, which are known and which are advised to you by your mentor. Maybe some of the business models you have developed, right? So both the things are possible. My question is only this, that why at this particular stage, which is known as mid stage startup, at that time, why investors are very much interested to understand that what kind of business model you are actually following. The answer is this, that they want to know that how quickly and for how long time you will be able to capture the market. Since you are doing with a BBA and MBA, you know about the first movers advantage, second movers advantage, third movers advantage, 10th movers advantage, nth movers advantage, last movers advantage. You know all those things. So when you talk about that, you are coming first time to the industry, how quickly and for how long time, that is the cash cow time. You know about the cash cow stage when we introduce a product into the market. So how you can prolong it, how much benefit we can get, it totally depends upon the what kind of business model you are following. So that is very interesting for the investors point of view. Then after, when you see that you have capturing the market and now your visibility has been increased and you are known by the public beyond your existing customers, future customers are also knowing that this particular company is existing and what are the value propositions about the product. Then after, you can expect higher investment as series A, series B, series C from venture capitalist firms. So this is how it moves. Betty, I'm just explaining it to you, that because I don't know what is your background, you know about the investment or not. But yes, this particular slide is important for you. You will have to understand that at what stage you are looking for some investment. Either it could be idea stage, or it could be early stage investment, it could be mid stage investment, or maybe it could be a number of series or stages kind of investment which we are expecting from the market. So I hope this is clear to you. If you have any questions, you can ask in between also, and in the last of the session also. Now I'm coming to the next part is this, which you need to understand, that valuation is always in US dollar. This is 100% sure that whenever you are actually going to talk about the valuation is always in terms of US dollar. Means maybe the valuation of my startup is 1 million USD, or maybe 5 million USD, or maybe 10 million USD, 7.5 million USD, or maybe 1 billion. So this is the valuation, right? So what is your valuation in USD? That is very important to understand. And you all know that 1 million means how much? It is 10 lakhs of rupees. 10 lakhs of rupees. And $1 is equal to 80 rupees in today's time, maybe 78.25. But say 80 rupees is the value of 1 USD presently. Then if I say that 1 billion USD means what? So 1 million means 10 lakhs of rupees multiplied by 80. That is 80 lakhs of Indian rupees. That is INR. So any startup, just for example, is having a valuation of 1 million USD. It means what? It is 80 lakhs of Indian rupees. I hope this is clear to you. Now, beta, for the broad idea that you must keep in your mind that if your startup is having a valuation of 80 lakhs rupees, it means that it is for the complete 100% equity. Means what the value, what is the value of your startup? That is say 10,000 shares of rupees 10, or maybe 1 lakh shares of rupees 10, or maybe 10,000 shares of rupees 100 each. So whatever it is, this is 100% sure that 100% equity means the complete valuation of your startup, that is rupees 80 lakhs, right? Now accordingly you can have this concept in your mind that 1% means rupees 80,000, 5% means 4 lakh, 10% of your company, that means 8 lakhs, 20% means 18 means 16 lakhs, 25%, that is 1/4 of the valuation of your company, that is equity of your company, it is corresponding to 20 lakhs, and 50% corresponds to the 40 lakhs of rupees. So I hope this is the second concept which should be clear to you. So if you are having any startup with a valuation of 80 lakhs of rupees and you are looking for some investors, then the broad idea says that if you are looking for say 8 lakh of rupees, then for 8 lakh of rupees you will have to dilute your 10% equity to me. Means I will actually purchasing that 8% equity in your company against 8 lakh of rupees. So 10% equity in your company against 8 lakhs of rupees. This is the investment which we are doing in your startup company. I hope this is clear to you. This is the second concept which should be clear to you. And the third concept is very important. Now the question becomes that how you are going to evaluate your startup. How you are going to say that this is the valuation of my startup. So there are various ways. There are various ways. Investors also conduct it at their end. We also do it at our end. As a mentor, we also suggest them to go to some valuer, and then after we try to find out that what is the value of your startup at every stage. At every stage means all those stages which we have discussed in our first slide. So if you are having a startup company from last 3 years, you are catering in in any particular sector. These are your products. These are your services. These are the AMCs you are providing. This is your market chapter, capture, and these all are the things which are actually there. Then after we can go and we can do the valuation exercise, and this is known as what the evaluation of a project. A startup valuation, for startup valuation there is very basic concept which was given by Dave Burkus, and that is known as Burkus method, in which Burkus says that we can divide the total valuation into 5 parts. First part is that how strong the idea is. Second part is what about the proof of concept and proof of value pertaining to the prototyping, that is quality and the technology check. Then who are the people who are working with you, the management team, the core team, just to say that whether you are having the capability to execute the business model or not. Then after we talk about the strategic relations, that what kind of network you are having, how quickly and how for a longer time you can be there in the market. And then after the production, that is the supply chain and the reduction in the bleeding part, that how quickly you can roll out your existing product which are there into the market are just going to the customer side, and new product from the production department that is coming. So all these 5 points are having equal weightage, that is 20% of the weightage. And then after we do the evaluation part, and we try to find out that what is the valuation of your startup. This is very old method. It was updated in the year 2016, but then too presently we are not focusing much on this Burkus method. So I am just going to discuss that what are the factors which are responsible for any startup valuation. So these are the 10 factors which are responsible for any startup valuation, right? This is the part 1, and through which we get the rating in AA, which is written and mentioned on the lower right side of this particular slide. And this is part B, means just for example that how we can further segregate to the parameters which I was showing in part A. So, just to understand that when we are actually going to evaluate, there are some due diligence part. We are doing it as a valuer. We try to understand the promoter side, then after the idea side, matrices, business model, 4 are very important. Then after coming to the middle side, that is industry analysis, where your product or your company is going to take some place. Then after the product analysis and market analysis, and then after the last 3, which are related to the potential competitors analysis, core strength analysis, and the growth analysis. I am 100% sure that you all have done all these topics. You are very well aware of, because you have already studying it in your management program, right? But then too, if you have any question, please feel free to ask me at the end of the session. We can have a question answer round. But this is 100% sure that out of all these 10 parameters, we are trying to understand that what is the maximum weightage we can keep. Who is going to give you this particular maximum weightage? Your consultant, your mentor, right? And they are doing it through some secondary data analysis, and they are saying that maximum weightage for the promoter, that is out of 100, say it is 15 or it is 10 or it is 20. Likewise idea also. Then after the matrices, and then after the scored weightage, means at that time when you are going for some valuation, at that time what is the score of pertaining to your startup related to promoters or idea or matrices. So that also you can count. Then after, there are some parameters which are definitely which can change from industry to industry, sector to sector, product to product, or services to services. But more and less, these are the main factors that we go for all these 18 kind of further analysis. And then after, we get a scale of, say, BB. BB is again out of 100. We multiply AA with the BB, and then after, the valuation is done. So this is one of the method. So likewise, there are number of methods. You can go and you can find out that what are the total methods by which we can have a valuation of any startup. So if you are having any startup, you are definitely having a valuation. Just like that if you are having a house, or you are having a car, or if you are having a laptop, you are having a mobile, it is also these things are also having some valuation. Your laptop which you purchase in 1 lakh of rupees, and in 2 years before, and today you say that what is the valuation, and I am giving its valuation as, say, 30,000 or 40,000. So right now, if you sell, you will be getting 30,000 or 40,000 amount, which we are going to evaluate, right? So like that, at every time you will find that your startups are also having some valuation. Generally, for the established companies, the valuation is like this, that especially if they are registered in the share market, the valuation is like this, that what is the present scenario of their share, that the value of their share multiplied by total number of shares. That is the actual way which we are doing, which everyone is doing, and that to understand the value of any company. But in present case, when we are talking about the early stage startups, and the shares are not floated into the share market, then these are the ways by virtue of which we can reach to some point that this particular value is the valuation of your startup, say 10 lakh of rupees, or 1 crore of rupees, or 5 crore of rupees. Accordingly, we can expect something from the investor side. It is just for your knowledge that you all must be knowing about the unicorn. Unicorn is a term which is very, very popular. Likewise, minicorn, sunicorn, decacorn, and hectacorns are also the words which are very much common these days. In the newspapers, you will always find that this company has become minicorn, or this company has become unicorn, and these companies are in the section of unicorn. So what does it mean? Any company which is having a valuation equal to or more than 1 billion USD, 1 billion USD, that is known as a unicorn. Right now in India, we are having more than 100 unicorns. More than 100 unicorns means the total valuation of these startups which I am talking about is more than 100 multiplied by 1 billion. That is at least 100 billion. 100 billion, right? So 100 billion means how many trillion? It is 0.1 trillion. And our honorable Prime Minister, he is having a dream to make India as an economy of 5 trillion USD. So if we talk about the 5 trillion USD, which we have not reached till now, and the contribution is coming, such a big contribution is coming from the startup side, then definitely it is a big achievement for our country. But I hope you are expecting, you are understanding and having a clear idea what we have discussed till now. Now I am coming to the topic, because now you understand about the valuation, and now you have also understanding that how we are, or investors are actually investing in that particular startup. Now there are two more terms which you should know, but I'm not emphasizing more on to into that part, and that is known as what the pre-money valuation and the post-money valuation, right? So pre-money valuation is generally the similar kind of thing which I am just showing it to you. That pre-money means the total valuation is say 80 lakh of rupees. Then accordingly, percentage wise, you can purchase, or I can purchase, or any investor can purchase. If you are interested, they can purchase your equity and they can pay this much amount to your firm, to your company, to your startup, right? So these all are the options when you go for the investment. But here mainly we will be talking about the angel investors and the VC funding. So now I am coming to the first part, that is known as what the angel investors. When we are going to talk about the angel investors, we have to understand that who are angel investors, what are the expectations of angel investors, what are their exit priorities when they like to or prefer to exit, and what are the bargaining powers when we are going to interact with the angel investors, and at the same time when angel investors are going to interact with an entrepreneur. So these are the 4 points very meticulously. Please go one by one. Just go through with these points, and probably after that you will have a clear idea about it. If I say that who are angel investors, say I am a person who was working with Maruti Suzuki for last 30 years, just for example, 30 years, and I have gained a very good acumen in that particular industry known as what the auto segment, four-wheelers auto segment, maybe commercial, maybe private, and I have reached to the age of 55 years or maybe 60 years, right? And I am looking to have a active participation on those startups which are dealing in the similar kind of industry or sector. I hope you are understanding that if you are a startup, you are making some electric vehicles or maybe some part of the vehicles, and you want to start your company as a OEM or as a contract manufacturing for some companies, and I am having expertise. I go through with your pitch deck. I try to understand that how I can invest in that particular company, and I am very much interested, right? So apart from the fund which I am expecting, or I am giving it to you, I am investing in your company, say against 10% or 20%. I am also giving time and my expertise. I am going to share the knowledge domain which I am carrying. So this is happening. Why? Because I am a successful or exited or a knowledge domain person, or a person who have already worked in the industry, and I want to invest. I want to invest in Delhi because I live in Delhi, and I really don't want only to look into the market that how it is going to take place, but very actively I want to involve in your company. I want to give my mentorship, that is known as what the smart capital. Then after, maybe I'm accredited, maybe I'm not accredited, but if I'm coming through some reference to you and I want to give something to the society, so what that kind of angel investor I am. I hope you are understanding my point. So likewise, I've given you some example of the auto industry part. Maybe I'm working in some FMCG company. Maybe I'm having some insurance and background. Maybe I'm having some idea related to the fintech. Maybe I'm into the education line and I'm preferring those startups which are working in the domain of edtech, that is edutech, right? So that kind of people are there into the market, and they are investing in the startups started by you people. So for that, it is very easy to find some of the angel investors. If you have reached to that particular level, definitely your faculty members, your institute, or maybe I can, we will be able to give you more clarity that how you can go and you can have an interaction with those kind of investors, right? So now the important aspect is this, that now don't see it from the point of view of an entrepreneur. Try to find out that what investors are looking for. If you are the investor and you are having number of options, but then do you say that I want to invest in any startup, so what is the risk propensity? So risk propensity is definitely higher. When you are going to invest in any startup, the risk is higher. But then two people are investing. Why so? because the main reason is this, that the return on ROI, that is return on investment or return on assets, that is highest when you are actually going to work in or associated with any startup. The possibility of getting a very good return, it is much higher. You can say that if today I am going to invest 10 lakh of rupees in any startup company, then I can expect 10x to 30x. That if I am going to invest 10 lakh of rupees, then after 1 year, you or me or I, we can expect from 1 crore rupees to 30 crore rupees. I don't know whether you are believing it or not, but what I mean to say is this, that at early stage, the return is much higher. It may reach up to 30x. With the same startup company, if I am going to invest after 10 years or maybe after 20 years, maybe after 30 years, we will not find that kind of return. Return would be there, it could be there, loss could also be there, but we will not find the multiply of that particular return as what we can find in early stage startups, with the early stage startups. Say if you are going to start a company today with a capital of 1 lakh of rupees, and 1 lakh rupees I am also investing with you, that is with a corpus of 2 lakh of rupees, you are going to start your own company. After 1 year, if you say the valuation is 20 lakh of rupees, it is not a big deal. Today you have started with 2 lakh of rupees, and after 1 year you say that the valuation is 20 lakh of rupees. It is not a big deal. But try to understand percentage wise on ROI. Your 1 lakh of rupees has been converted to 10 lakh of rupees, and my 1 lakh rupees had also been converted to 10 lakh of rupees. So what is the ROI? ROI is 10x. And this is very common, that a 2 lakh of company is going to 20 lakh of rupees. It is not a big achievement. It is a big achievement when it is going to 2 lakh of company is going to reach 60 lakh of rupees, maybe 50 lakhs of rupees, right? So this is actually, it is happening, and that is why it is more and more lucrative to the investors, and more investors are now coming to invest in startup companies. You can see what is the scenario of the country's investment options, mutual fund, share market, the rate of interest which we are getting from the fixed deposits or recurring investment in banks or financial institutes, that also PPF investment, right? Sukanya Yojana and so many other schemes are also there. Government bills are also there, but it is not giving that kind of that kind of returns to you. So maybe that is the reason that more and more angel investors, they are coming into the field. Now from the angel investors point of view, they are not going to invest in only one company, or maybe they are not going to invest in 2-3 companies. They are going to create their portfolio, that I am having, I have invested in 10 companies or 15 companies or 20 companies, and maybe all those companies are not in one domain only. So they are actually diversifying their investment industry wise, that 2 companies are in FMCG, 3 companies are in electronics items, then 2 companies are in edtech. Like that, I am diversifying it. Why I am doing it? Just to mitigate my risk factor, right? So slowly and slowly we are going to make a portfolio. And this, why I am sharing it to you, that you must know that from what kind of mindset any angel investor, they are going to invest in your company. And they are also having this thing in their mind, that after 5 to 7 years they will be completing their fund life cycle, and they are expecting some return, right? And that particular point is known as what, the terminal point, when we are asking money back. Maybe you can buy it as a buyback option, and maybe some other investors, they will be coming to the company board, and they are buying our our stakes. So these all the points are valid, and these all are actually happening into the market, right? So what is more important in this, you will have to remember 4 important parts when actually we are going to deal with the angel investors. Number 1 is this, that whenever entrepreneur or the startup, they are going to interact with angels, they want to take more and more money against less and less equity. That means this much money with less equity. And what the angel, they want more and more equity, and they want to pay or invest less amount. So there is always a conflict, that what would be the actual valuation of the startup company. So here actually we talk about the bargaining power. So your bargaining power and the bargaining power of the investors, where at which particular point you are going to meet, that gives a lot of value. Then after these days, cross-border angel investors are also coming. Investors are coming from UAE, they are coming from Saudi Arabia also, and many times we are seeing that investors are also coming from European countries, Singapore. So such kind of investment is also coming. So some formalities we will have to take care. Then after we can also have similar kind of conditions or bargaining with them. And then international investment platforms are working very nicely these days. And why it is happening? Because it is a global market. It is a global village. It is a global market. And although I always emphasize on local production and local production and local consumption, but yes, many times it is seen that our product is coming to the different countries, and different countries products are also coming in our country, which is a part of international trade these days. So accordingly we have to actually bargain with the investors. Then after, when they are investing, many times valuation is not clear, then they take some some benefits of safe. Safe is a document which is known as what? The simple agreement on future equity. Simple agreement on future equity. So such kind of convertible instruments are also available in the market, which we facilitate to our startups or to our incubators. That if you say, sir, I'm not sure about my valuation, but right now I need 50 lakh of rupees in my startup company, and some investor is ready, then safe is the instrument through which we can proceed further. Right now, that was something about the angel investors. Now if we are coming for for VC firms, then who are the VC firms? That is, now there it was an individual person agreement, was small, from 3 page to 4 page, need not to make a term sheet kind of instrument. Contract that's always there, and accordingly to that particular contract we can also revive our AOA, that is when we are incorporating a company, article of association, that is also an important document, and some definitive agreements also, contract also we can sign. That is an easy part. But here in the VC, when we are going to take fund from a venture capitalist firm, this particular documentation part is increased, is enhanced. Here what is important to understand, that who are the VC firms, then how they are different than angel investors, then what is the structure of VC firm. Here when you talk about the angel investors and venture capitalists, since we have already covered angel investors, business angels, so what is the main difference is this, that there it was an individual person, right? And that individual person is also interested to invest their money, invest their time, and invest their intelligence, right? And they are investing in your company as a single person. The contract was simple, everything was simple. But here when we are talking about the VC firm, they are basically money managers. They know where to invest. They are having better idea where to invest, and that is why probably you will never find that VC firms are coming at idea stage, right? They are always coming at series A, series B, series C onward stages, when they are sure about the promoter, when they are sure about the product, when they are sure about the business model, then after they are coming. And here the investment is huge. You can say, sir, 10 million USD, okay, 50 million USD, it is okay, this many crore rupees, this is okay. So such kind of investment they are coming, and that too, they are not going to take it back from you as a debt, but they are going to invest in your company. They will be taking some equity, right? So this is how we are having a difference between the angel investors and a VC firm. In the VC firm also, since we have covered VC firm, it is having two main partners. Number one is the limited partners, those who are actually investing in your startup company through VC firm, right? If I am having 5 crore rupees, and Dr. Sheetal is having 5 crore of rupees, your one more faculty member is having 5 crore rupees, then the total corpus is, say, how much? 15 crore rupees. And now with that particular 15 crore rupees, we are going to appoint a CEO, we are going to appoint a manager, we are going to appoint some staff members, and we are going to have some VC firm after a certificate which is taken from the SEBI. And then after, I am offering crore of rupees is the fund which we have closed. Now I am coming to the startups, that we are inviting startups in this particular line or in this particular domain, and we are ready to invest with a minimum ticket size of this much, then number of startups they are applying to us, and we are having a cohort kind of thing. Then after, with a small cohort, we are going to invest. If some curation model is required, that also we are doing it. Some acceleration model is required, that also we are doing it. So with something, if it is required, so that is the ideal VC firm. Otherwise two VC firms are, they are having some eye that how you are moving, how you are performing. So everything is there. So this is the basically the structure of a VC firm. So after valuation, depending upon the agreement, they are giving you some money, some fund, and then after they are buying they are buying your equity. So getting fund and negotiation, that is the one part. But this is very important. This is probably the last slide from my side in today's session. That these are the important documents when you are going to deal with VC firms. Whereas if you are actually talking about the angel investors, I am not saying that these documents will change. These documents could be there, but then too, if the investment is not higher, it is very easy and it is something cool to take investment from the angel investors. But now, what I am seeing from last 5 years, that all the angel investors, they are converting themselves to a VC firm, right? They are having some corpus, they are having some team, and then after slowly and slowly, they are also trying to get some, some certification from the SEBI, which is known as what the Alternative Investment Fund (AIF) certificate, and they are trying to convert themselves as a partners VC firm. So these are the documents. If you have any questions pertaining to any document, I will be happy to answer those questions. So this is all from my side. My details are these. If you want to contact me further, any questions if you are having, you can also email me.
Oh, thank you so much, sir. It was really, really insightful. So, for the questions, I'm asking the participants, if you have any question, you please raise your hand. Students, if you have any question, you can raise your hand and then I'll allow you with the mic. So in the meantime, sir, I can take one or two questions. It was really insightful and you have explained. Am I audible to you clearly, sir?
Yes, you are audible, Shita.
Okay. So this is Dr. Sheetal. I think because of two persons joining from the same link, I think you're not able to figure out.
Okay.
So it's like that you have explained very nicely about what is evaluation and that what kind of things people are looking for. What is the kind of uh, the the equation between the entrepreneur and the angel investor? It's pretty clear. But what are the ways by which the students can reach to the angel investors? How they can get into that kind of network? If you could explain that also, sir.
Ma'am, directly if they want, they can go and they can contact with those angel investors directly. That is the first option. But the way is long. Way is long. I always suggest all the startups to get some space in some incubation centers. We are also having some incubation centers since you are in Delhi. Delhi government is having total 10 incubation centers. Mine is IGDTUW Anveshan Foundation. It is in Center Delhi. The university is Indira Gandhi Delhi Technical University for Women. So any of the women candidate, if they are looking for or they are want to work in any startup, they can come and they can contact me. My office is in Kashmiri Gate. The name of the incubation center is Anveshan Foundation. But I don't have much idea that whether you are having this concept of incubation center, it is known to you or it is not known to you. Actually, incubation centers are helping all the incubatees, all the pre-incubatees to have their startup working in the market. So we help you in developing a product also. We also help you in developing a market. That is the complete hand-holding part we are doing it. Complete hand-holding, including IPRs, your company formation, your product validation, everything we are doing it. There is a very minimum fee against it because we are supported by Delhi government and we are also supported by Department of Science and Technology, Government of India. So we are catering only to the women entrepreneur or women enterprise. The reason is this, that I belong to a women university. At the same time, there are other incubation centers are also there. You are in Rohini, you are having Shahid Sukhdev Business Incubation Center, that is SIIF there, and DTU Business Incubation Center. You can go there and you can contact their CEOs, that is Chief Executive Officers. If you want, you can also give my reference. So, but before that, you should be ready. You should be ready with some good business idea. So you do your own practice and then after try to find out some space in incubation center. As soon, ma'am, they will find any space in the incubation centers, angel investors or VC firms, they will be coming and contacting with you, because as the head of any incubation center, it is my duty to establish you. So that is the easier way. Apart from that, if you want to do it by your own self, you are having your company, then too I will suggest you that there is a one company, website started by Government of India. The website is startupindia.gov.in. So in that particular website, startupindia.gov.in, you will get the complete, complete information about all the incubation centers, investors, maximum numbers of investors there. I am having a group of the investors on LinkedIn. So if ma'am you say, then I will be sharing that particular group link to you. So if you are looking for some investors, you can also keep posting your business idea or the stage of your startup there, and maybe otherwise also. But likewise, me, there are more than 100 mentors who are very actively working in the ecosystem, Delhi ecosystem of startups. So you can go and you can contact them.
Right. So that was quite handy, sir. And in fact, I'd like to tell you that we are not only aware of incubation, we are in the process of finalizing an MOU with the incubation center. And as far as DTU is concerned, I think I am already in touch. So it is a good. Am I still audible, sir? I think
Yes,
you
yes,
have
you
not.
are
Yes,
audible.
yes,
Yes.
okay. So we are in touch, and it's really good that you're actually doing a lot of efforts to encourage women entrepreneurs, because women entrepreneurs are going to be, the game changer of Indian economy. These are the ones who are taking the backseat, and if they are encouraged, I think they can bring huge amount of contribution to the GDP as well. So definitely, sir, this is going to be a good idea. In addition, I have got one student raising hand. Tanish, if you have any question now, you can unmute yourself, and I have given you that right. You can unmute yourself.
Yes, ma'am. Ma'am, I had just one question that how can we see future in this? Like, we know that we are gonna get finances, but like, how exactly?
Tanish, you are a student of BBA or MBA?
So
BBA, sir.
BBA,
MBA?
So
so
I'll
BBA,
put.
bachelor's.
BBA, okay. Tanish, it goes like this, that if you have a company, it is having some stakes. Right now, the complete stakes are with you. Then after slowly and slowly, you increase your team. Still, you are having some stakes. And when your company grows, then say which company you have started in the year 2022. In the year 2020-28, you find that still 25% or 30% stakes are with you. Now, what the income is generated by your company, you can number one, you can draw your income from that particular revenue of the company. Say your company is Tanishq, your name is Tanishq. Am I right, Tanishq? Yes. Your name is
Yes,
Tanishq,
sir.
and you want to start something related to the polymers, right? And your company name is Tanishq Polymers Private Limited. And through that particular company, you are getting some orders, and your revenue is say 50 lakh of rupees or 1 crore rupees. So number one is this, that you can draw your salary. Number two is this, that when you are going to show the revenue and the profit, you will also be able to get some get some value through some debentures. Sorry, not debentures. Through your profit, which is coming to your share, right? Profit which is coming to
Yes,
your
sir.
share. So that is also possible. And since you are having 25% stakes in your company, Tanish Polymers Private Limited, so that also you can get that particular benefit. So two types of benefit you will be getting. Apart from there, apart from that, some of the expenses which you can incur from the company's account. So that option is also with you. Right. So if you are actually going to own a company, it is a bigger thing in comparison of the thing where you are actually going to work as an employee in any company. But the point is that the company should work, company should run, company should flourish.
So thank you so much.
So, sir, this is because I'm running IIC here. So, this is the first question. Despite generating the awareness, students are not finding that kind of courage to get into this journey of maybe if I say this hard work or this arduous journey of entrepreneurship. So, how to encourage? Like, what difficulties you experience while you're running this incubation center, sir? Do you get people walking in very easily, or is it like you have to motivate them?
No, no, ma'am. We have to motivate them, but my problem is not like this. Your question is having actually two parts, ma'am. Number one is this, that youth is not coming to start. They are not very much motivated to to have their own startup. Uh, there are so many reasons. Problems are not only with the institution part. Problems are also related with the government part, ma'am. From the international bodies also. In India, actually, manufacturing is not happening, ma'am. That is a core problem. If manufacturing is not happening, you will means we as an Indian, we will not be able to show our capability only on the basis of services. It is good that IT may we are doing very good. We are very good in IT, yes, but manufacturing should take place. So for a longer period, we cannot say that for the next decade or for the next 2 decades, 10 years or 20 years, we are not going to consider the manufacturing part. So, Bete, you will have to understand that government should always boost manufacturing. That is part number one. Part number two, most of the startups which are coming in India that are related with the services sector. I take that fintech, edtech, martech, everything related with the tech we have included in. Then after we are working as a services tech. Now what happens that many times it is tied to the customers. Many times it is from the business to the customers. But most of the time these kind of startups are based upon B2B kind of structure. So again, we are not doing very good, although we are having, ma'am, more than 100 unicorns presently associated in Indian economy. Means they are there, they are having a very good contribution, that is there. But with this particular population and the efforts which government is doing, 100 is not a big number, right? At the same time, if you, I'm talking many, I'm giving you a true fact, ma'am. From the year 2016 onwards, there was a bust. There was a balloon of startups, and till now, today we are having more than 62,000 startups. And similarly, there's also a bust. A bust means now active startups, if you ask, it is not more than 42,000 startups. So what is happening? We are increasing in the terms of numbers, but what is happening actually, that could be, we have to understand it from the apex body. We will have to understand what kind of problems startup promoters they are finding. So in my incubation center, ma'am, since we are dealing with the women entrepreneur, yes, motivation is a problem, but then too we are managing it. In my incubation center, there are total 17 private limited companies. All are managed by women entrepreneurs. If you or any of your girl student, they want to start their company, they can come and contact us. But the only part is this, man, vesting should be there. Vesting means you should have some interest, that you are self-motivated and you want to do something. So if that is there, we are always, I'm not saying that I am always, we are always, we means the complete ecosystem is there to support you. But you should be having some one directional mind, you focused mind, that yes, I am going to do this particular business and I'm here for next 5 years. That is at least for the mission period.
Very well said, sir. So I think one more last question from my side. I just want to understand the things a little bit. Like as a student, if they want to connect with you, they can come directly, or we need to have MOU with you with your
Ma'am,
organization first.
if you want to have MOU with us, there is no problem. We have already signed 10 MOUs with private colleges and universities, and
Okay.
we also invite you to different programs. But yes, if any of the women, they want to come through us, we are giving newspaper advertisement every time. In both the newspapers, at least Hindustan Times and Times of India, we are inviting applications. So they can also directly come to us to become incubatee, not as a pre-incubatee. For the pre-incubatee, we are having some reservations and preference to our own university students. But for the incubatee, they can come and they can join our incubation center. We are providing you all the benefits. We are also having a provision of seed fund up to 10 lakh of rupees against equity.
So that's really wonderful. So the students, if you still have any question, you can raise hand. I could see that 2 hands were raised, but no longer visible anymore. If you have any question, you can write in the chat section, or you can ask directly. So I think, sir, there are no more questions. I think this is a problem with entrepreneurship. So it's like you said, rightly said, it is like a balloon and it burst very quickly. So the students today, it becomes very difficult for them to actually gather up that courage. Harshit, yes. So I have got one more question. I'll just allow this person as well. So Harshit, now you can unmute, you can ask your question. You can unmute Harshit and ask your question. So maybe there is a connection issue here. Ishita, if you could read out some questions from the chat, if you have any.
Asking why female should enter this field.
Okay, so we have got this question from Harshit sir. He is asking that why females should enter into this field. I mean, what preferences would they be getting over their male counterparts?
Ma'am, can you repeat the question, please?
Sir, despite that, this is a male student, but he's asking that what preferences females get while they enter into entrepreneurship? Why should they enter into entrepreneurship?
Okay, for the female, for the women entrepreneurs, Betty Sheetal ma'am was also saying that in the GDP of India, there is a large contribution which we are expecting from women's side. So government is promoting women. Government is promoting all the women. And Betty, from last 5.5 years, I am associated with this incubation center, which is catering only to the women part. My own perception about the women and how they are going to deal with the business scenario, that has changed a lot. I personally feel, if you are saying that women are better managers, they are trustworthy, they are not going to work in very haphazard manner. They are managed. Definitely, there are some loopholes also, which we time to time, which we understand, and we try to give them some guidance. But yes, from the government side also, there are some schemes. From the corporate side also, there are some schemes. Some of the CSR funding, which is directly coming only to the girls, only to the women. And from the institute side also, there is a scheme for women entrepreneurs. See, as I have already mentioned, that there are total 10 incubation centers. So initially there were total 11 incubation centers, but after the introduction of Delhi Skill and Entrepreneurship University, two incubation centers have been merged with that particular incubation center. So now presently there are total 10 incubation centers which are belonging to the Delhi government, and we are the only one who are actually catering only to the women. So men are also having more than means 90% options they are having. In our incubation center also, but men can apply, but more than 51% stakes with their company, that should be belonging to a women. I'm not saying to one woman, maybe two women, right? So then after, what we say, that it is the women enterprises. As you must be knowing that if any private company, private limited company, if more than 51% stakes along with the major shareholders in the board members, it belongs to the women. What we say, it is as a women enterprise. So if you are talking about to understand the schemes which are coming for the women, so it will take a lot of time from my side. But I will suggest you to go through with the website of, again, startupindia.gov.in. Where you will find all the schemes from all the ministries. From all the ministries of central government, you will find the schemes. Many of the schemes are belonging only, and they are offering only to the catering only to the women entrepreneurs and enterprises.
One last question I think we can take, sir. It's by Utkarsh Lamba. He's saying, how can we remain determined on our startup goal and not distracted by external environment?
So I cannot better do anything good. I can only miss. We can only give you some guidance. It has to come by your own. If you will ask that Guru Bhai Ambani, I'm sorry, I'm taking that example, who is already very much successful, who was very much successful. So he was actually determined. So you should be determined that this I want to do, this I don't want to do. So if that kind of thing is not there, but recently we have got the result of UPSC IS result. So all the people, those who are selected, they were determined that this is the only one option that I will be doing it. I'm not saying that after that they will be demotivated, they will be taking some wrong steps in their life, but at least at some point of time you will have to be determined. Otherwise, if you will take it very easy, that this is happening, this has happened, okay, easy, this has happened, okay, easy, then one day you will find that everything is lost in fog. So, I cannot say you that this is the medicine or this is the thing. Just I will suggest you to go through with the stories of successful entrepreneurs, and one day you will find that yes, I am determined.
Right, sir. Very well said. So your session was really insightful. I think those students who really wanted to learn, they would have really gained out of your session, sir. It was really detailed, explained, and thank you so much for having accepted our invite, sir, and enlightening our audience with your words of wisdom. On behalf of Geetarathan International Business School, I, Dr. Sheetal Chadda, would like to thank you and hope to have a longer association with you, sir. And we would like that students should visit your incubation center if you permit anytime, whenever you think it is fit. And definitely, I hope that students would come up and with the business plan, and we would be taking their proposal to your center so that we could have a strengthening of collaboration. So thank you so much, sir, for joining us.
Thank you, ma'am. Thank you, ma'am. Thank you. Thanks to
So
all the participants.
Yes. So participants, really thankful that you have joined. All the students need to fill up this feedback form, which is there in the chat section. And upon filling up this form only, I'll be giving you the attendance. Thank you so much. And after filling the feedback form, or you can directly fill up the feedback form and can leave. Thank you so much for joining.